Hey everybody, are you paying too much to trade options? Well, if you're not on public.com, the answer is yes. Public is the only platform where you earn a rebate on every option contract traded, and that's in addition to no commissions or per contract fees. There's no one else out there paying trading rebates, so you won't find a better deal. Bottom line is, if you're paying more than $0 to place an options trade, then you're paying too much. Switch to Public and start getting rebates on every single contract traded, only at public.com. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. I hope the first thing the people hear and see is you cracking open a drink.
They might, but they might not. I'm waiting right now. I'm watching. And we are almost live. So we're live, but the link hasn't popped up. Oh, it's there. It's there. It's on the YouTube page. So on our YouTube channel. So it should take a couple seconds for people to start signing in, joining us on this fabulous Friday.
Awesome. Hey everybody. Welcome to the Not So First Friday live stream in June.
The second First Friday, second edition.
Yeah.
However we describe it. We'll come up with
I would like to say that we often name things giving it almost no thought. But then I think that brings some entertainment when we name something First Fridays and then do it on the second Friday.
Right.
I'd also like to point out that literally 0 people reached out to ask where the live stream was. I guess this is not the highlight of everyone's first Friday of the month, but thank you to the people who are joining us right now and listening later. We appreciate it.
Yeah, I think there's a good chance that we got a text message or a DM from the people are. John Delney says, I miss the smattering. John, we're still the smattering. We'll always be the smattering in your hearts.
We're the smattering in your hearts, and we're investing in Unscripted for search engine optimization.
Yes, exactly. That's it. And Sina, of course, I ignore Sina's comment. Sina, thank you. Good to see you on. Eric DeVore is living up to one of our 3 important rules on our YouTube channel, which is to make fun of Jason's hair. So well done, Eric.
Yeah, I mean, I think it's great that we can make fun of your hair. Not your hair's not great. I was just that we can make fun of it.
Yeah. My hair's amazing.
That's one word for it.
There's a lot of ways to define amazing. So that's it. So I'm having a beverage. I'm having some chilled wheat soup. I'll give a free plug to local brewery, Ipswich Ale. It's their oatmeal stout. Having that. Jeff, are you having a tea?
I'm having a tea.
Yeah.
And I don't know if he'll listen to this, but the tea is a gift from a friend of mine. So I want to hat tip to Dan for the tea. So
you're having some Dan's tea.
Having some of Dan's tea.
Is it
it's from Sri Lanka, I believe. So it's fancy tea.
Nice.
So
very nice.
All right. Well, we have a
John Delney, very good. Doc Brown, well played.
Yeah,
well played.
I still think you look like a founding father. Like she's got George Washington. Yeah, that's always my go-to. Like you could be on the dollar bill.
Look at Matt, 3rd live stream today. Boy, Matt, you haven't gotten anything worthwhile accomplished today, have you? 3rd live stream. I'm kidding.
Difficult Friday there for Matt.
Yeah. Lou Whiteman in the house? Lou? Are you surprised Germany's first penalty appeal in the first half was not given? The second one seemed harsh given. See, he's talking about soccer, isn't he?
He is. So let's come back to the chat in a little bit. I want to make sure that the people who listen to this as a podcast, just listening to us, chat with everyone who's on live right now. We have some interesting topics here, Jason.
We do.
And I'm glad we're doing this when we are, because I was away last week.
What's happened?
Yeah, it was nice to sort of disconnect from the craziness of the market for a week. And I won't go too far into it because this is kind of the topic of next week's podcast. But spending time disconnected from the market and alternately reading Port Charlie's Almanac and also earnings call transcripts and SEC filings was an interesting juxtaposition. So more on that next week when you guys listen to the podcast. And yes, Lou, we are ducking your question. Absolutely.
Yeah, absolutely. I want to say, it looks like we've got Dave from Investing for Beginners podcast is listening in, giving me a little Thomas Jefferson chops. So I'll take that too. Dave, it's good
I
to
mean,
see you
there's
here.
worse people to be compared to than founding fathers, right?
Yeah, no, I agree. I agree with that. I agree.
All right, so let's kick things off with I think this will be a fun topic for the people listening and also for the people live right now to kind of chime in on, especially some of the people who are in the chat right now. We want to talk about Tesla and a couple things about Tesla. The shareholder vote that happened that supposedly reinstated Elon Musk's pay package and the new ARK Invest projections on Tesla's future, which are legitimately insane. So there's a lot here, as there always
Highly
is with
optimistic, we could say.
that's a more charitable way to put it. I don't think they're going to come after me, but if you want to be more diplomatic,
Directionally, what you said was not untrue.
yeah. All right, where do you want to start? Because there's always a lot
Well,
with Tesla and Elon.
yeah, so I think we'll just start with, I think most people probably have some idea of what's going on with Tesla. They voted to move to Texas. Their corporate domicile to Texas from Delaware. And also the vote to reapprove Elon Musk's pay package. And there's this $50 billion-ish number that kind of gets thrown around. And the reality is that the number is based on the share price, right? But the short version there is that a Delaware judge struck it down. They rejected it when a disgruntled shareholder filed suit saying that it was basically illegal what they had done because there were some things that weren't disclosed about relationships with board members and conflicts of interest and all that kind of stuff. So it was rejected by this Delaware judge. And so they just basically repackaged it, disclosed all the stuff that had been, the judge was saying had not been disclosed because they included the judge's summary as part of the submission to shareholders. And so let's start there. I'm curious your thoughts on, I mean, this was a chance for shareholders to get back, I don't know, what, 15% of the company's equity in dilution by telling Musk no?
The whole thing, all right, I'm going to give full credit to my knowledge about this is based entirely on reading the Money Stuff newsletter by Matt Levine.
Yeah, so it's a Bloomberg blog.
Yeah.
Go subscribe for it. It'll
It's
show up in
great.
your email, and it's worth it. It's
great,
always
yeah.
worth it.
So nothing that I say in terms of this stuff will, I want to give full credit where it's due. I'm cribbing a lot of what Matt's written about.
Borrowed conviction.
That's right. But I think I want to think about it a little bit differently because so there's some things that Matt wrote about that I think are worth considering, which I think his most recent newsletter yesterday talked about how it may not be as simple from a legal standpoint to just take a shareholder vote to undo what a judge decided. So I don't know that this is set and done, but I'm more
all it takes is somebody suing again.
Yeah, but I don't even think that has to happen. I think I don't know that this like undoes the judge's decision. Like that was the point he was trying to make.
Right.
I'm more interested in, it's such a fascinating case about fandom and how that plays into certain stocks. I mean, I think there's a direct line between the way the most fanatical Tesla shareholders view Tesla and Elon. There's a direct line there to the meme stocks, to Donald Trump's stock, right? Like not always attached to fundamentals, but attached to vibes and personalities and, hero worship and however else you want to frame it. I think, that initial pay package, what's crazy about it is it was probably, I wasn't aware of it at the time when it was approved the first time, but it was a really ambitious goal and he met it.
Exactly.
So,
Yeah, right. I
get
exactly.
it, but on the flip side, like most shareholders probably didn't understand it and a lot don't even vote. But this kind of proves that it almost doesn't matter because enough of the loyalists are going to vote yes. I think some of the big institutions voted yes too. But from a purely economic, I'm a shareholder standpoint, it's not good for you to vote yes. Like what's good for you is to pay Elon as little as possible because that dilutes you less.
Right.
But that's not, I don't think that's why people own Tesla stock. I don't think they own it because they think Tesla's this amazing car company. They own it because they like Elon and they think he's going to have robots and robo taxis. And so the whole thing is just, I don't know, it's just an interesting example of kind of where we are right now in the
Yeah.
markets, literally.
Well, I think so, but I want to push back a little bit because I do think there's a pretty large institutional base that looks at what Musk has accomplished and says, this is a guy that, despite the rough edges, despite the fact that he's always one tweet away from a fine from the SEC, he has no respect for regulators. He pushes the boundary of the law, allegedly sexually harasses employees. Like, I mean, all of the negative things. If you think about what he's accomplished, the businesses that he's built, it's still pretty remarkable. It really, really is. So,
Well, I mean, it
and
goes to show
but I
you.
guess what I'm saying is like they're willing to like accept all of that baggage that comes along with this incredibly effective creator of businesses and builder of value. So, there
And
is
it,
that.
and it is true. I mean, if you go back through history in any field, you will find people who were enormously successful and did transformational things who had questionable choices made in other parts of their life. Like you can go into any field at any time, and I never know how to feel about those kinds of things. I know we got Eric DeVore on here watching us. I know he's a composer. There's tons of examples of this in music, modern popular music, and also old school classical music. I mean, Richard Wagner is a great classical composer who really loved Hitler. So
Right.
it's like,
Right. Right.
I think with all people, you take the good with the bad, and it's just hard because some of the bad is really bad and some of the bad is less bad and some of the
Yeah.
bad is something that you don't like and something I don't mind and vice versa. So, um, but what I wonder is down the line, does this hero worship turning a blind eye to the downside, does it ever come back and like really hurt retail investors? Like that's
Yeah.
my wondering. Like if
Right.
all of the autonomous driving and AI ambitions and robots doesn't pan out,
Right.
and a decade from now Tesla is valued like and performing like GM, I I don't know. Like, I'm just curious, and maybe that never happens. Maybe there really will be robots next year. I don't know.
Well, I
But
think that's interesting, right? And that's a good bit of a pivot into the next thing with ARC's modeling that they've released for share price. Because if you go back to when this pay package was put in place and the talk around Tesla, the talk wasn't about Tesla, the car company. It was about Tesla, the unified energy and mobility company, right?
Mhm.
Autonomous transportation was a big part of the conversation in 2018. Solar was a much bigger part of the conversation than it is now. There's all the things that happened with Solar City that destroyed value partly to what in hindsight looks like kind of support Musk's equity investments and also the equity investments of some of his family members that were running Solar City. And none of those things have not created value. I mean, sure, there's the $10,000 a pop that they were getting for FSD that certainly padded the bottom line, but there's not a bunch of autonomous Teslas driving around right now, right? There's not this massive solar business with the solar roofs. And they've made inroads with batteries. They've got a lot of market share there, but it's not this massive integrated business that we were told it would be. So now it's getting repackaged again. And what ARC is saying is that the size of the robo-taxi business is going to be, I did the rough back of the napkin math. I think 2023 global GDP was, call it $100 trillion to have a round number. They're saying in 2029 that Tesla's robo-taxi business is going to be a $600 billion number. So that's roughly $1 for every $200 that gets spent anywhere on the entire planet that's just going to go to Tesla just for people to drive in Tesla robo-taxis. That doesn't include a single dollar going to any of the other transportation services on the entire planet. That's ambitious for
Yeah,
a technology that hasn't been fully developed, and a vehicle and a business that doesn't even exist, that you're going to be, almost more than 0.5% of global GDP in 5 years.
yeah, and I thought a lot about the whole robotaxi thing, not even just as it relates to Tesla. I mean, they're not the only company out there. Everything I hear about Google's or Alphabet's Waymo is very good. Like it seems like they're doing good things. GM had its cruise division for a while, and then that got shut down, and I think it's coming back. I I just cannot imagine a world, certainly not by 2029, where you're going to get mass adoption of autonomous driving. I can absolutely understand use cases for it. I can understand robotaxis around a city where you're never really going above 25 miles an hour. And as long as and you're just doing short trips around and not replacing like taxis. I, I could see it in maybe exurban areas for people to get around. I mean, do some people choose if it's available as an option? Do some people choose to not have a car and just use a robo taxi to get around? I don't know. There's a couple things that I think are going against this trend. So one is American culture is pretty built around cars. I mean, to our own detriment, like you if you read
Yeah.
anything about transportation in our country versus literally anywhere else, we are massively behind in public transportation and that kind of infrastructure because we've been such a car-based, culture since cars were invented. I just don't see that shifting in the next 5 years. Like, you wanna tell me in 25 years, 30 years, maybe? Um, and I don't I you know, I don't see this taking off in, like, rural Kansas, just to pick a random state
Yeah.
that's not New Jersey. Um, I could see it being popular in places. I mean, it feels like 6 out of every 10 cars I see in my town is a Tesla, so, like, I could see a world where, like, around here it becomes popular. I could see maybe long-term trucking being a viable place for something like autonomous driving. Um, I just
Yeah, because
absolutely
regulators are going to completely approve having an 80,000-pound vehicle not have a
Well,
human
no, no,
behind the
so
wheel.
this is the other part of it, right? I've been this is the next thing I wanna say, and then I'll stop ranting and hear you have to say, and maybe some people in the chat too. I I feel like at some point, there will come a time when regulators very much get involved,
Yeah.
and I don't know when that time is. I don't
Well, it's
know,
already
like
happened. It happened in California with Waymo, right?
yeah, well, that's what I'm
Or
wondering, like, so
Cruise.
'cause Tesla's gonna roll this out
Cruise.
irresponsibly. It was Cruise. Yeah,
Yeah.
that you know, and I get both sides of the argument. You hear some people say, you know, even right now, cars are better drivers than humans, just from like a statistical standpoint. But you know that as soon as a autonomous driving car kills somebody, it's going to be a headline. Two or three of those headlines, politics and
Right. It's the
public
outliers. It's
pressure.
the stories that win, not the
Yeah.
data.
And
Yeah.
again, in 25, 30 years, does that change? Yes, maybe, but not by 2029, just to get specific to this arc projection. Um, and that's if people want this. That's the other thing too, like, I don't know this is something that people are, like, dying to have. Same thing with, like, creepy robots walking around, like, would I love to have someone who could, like, do my laundry and cut my grass that's, like, a robot? Cool, maybe, but it would still be really creepy to have it in my house. Um, my wife's creeped out enough having me in the house. I can't imagine a
Well, we
robot, so
understand that though.
yeah.
That's
So anyway, I can't buy it. This is not even specific to the ARC thing. I don't think autonomous driving is maybe ever gonna be a huge mass thing where, like, nobody has cars, and I certainly don't think it's happening in 5 years. Hey, everybody, we'll be right back, but first, a word from our sponsors. FinChat.io is the complete stock research platform for fundamental investors. They have all the standard financial data on more than 100,000 stocks globally. But beyond that, they have company-specific segment and KPI data on more than 1,500 stocks. Want to see Netflix's average revenue per member over the past 10 years? FinChat's got it. Do you like to track YouTube's advertising? They've got that too. Want to see how much of Celsius's revenue comes from Costco? You guessed it, they've got it. The breadth of FinChat's segment and KPI data is truly one of a kind. I use FinChat all the time and I love it, especially for checking out the KPIs of all the stocks in my portfolio. To get 15% off any paid plan, go to finchat.io/unscripted. That's finchat.io/unscripted to get 15% off any paid plan today. The link will be in the show notes.
Do you like learning about investing, researching stocks, learning from great investors?
If you listen to Investing Unscripted, then the answer is probably yes. So you need to be listening to our podcast called Chit Chat Stocks.
On Chit Chat Stocks, we do hour-long stock research episodes on your favorite companies, analyze legendary investors, and interview experts in the world of investing.
Get started listening today and come learn along with us. Follow Chit Chat Stocks on YouTube, Spotify, or Apple Podcasts.
But if they just take their robot and they like make it look like Baymax from Big Hero 8,
I am not fast.
see, then we'd be fine. It could be the same thing underneath and it wouldn't matter, right? So
That, all
I
right,
want to push, I
you
want to push back
presented the
a-
alternative scenario
Right, it's
where
the
we all look
alternative.
like Baymax.
There you go. There you go. But I want to push back a little bit on a couple things. So I want to give Tesla a little bit of, and again, this is coming out of ARK. This isn't coming out of Tesla. I think that's important to delineate that. But I
Yeah,
do
but
want to
he's been pretty, well,
Oh,
he's
but
always
no, but he
outlandish.
always has.
Yeah.
Musk always has. So that's nothing new there. But what I want to say is like the approach that Tesla is taking. So you look at the Cruises and the Waymos out there, and they're using LiDAR and they're doing these geofenced areas where they're trying to develop their technology. And Tesla is going with optics, video cameras, right? Primarily. And they're insisting that that's going to, even though maybe it's not as effective now, is that as the technology ramps up, as the data gets better, as AI's ability to play a role in this evolves, the ability to go in other places, right? In different weather conditions and all that kind of stuff. So it's going to open their technology up much more quickly to markets where nobody is working on autonomous driving now because their vehicles can figure it out. Of course, it's a giant grain of salt to believe that because there's no evidence yet that that is the case. The other thing I want to say is that you think about that $3,000 plus high end and their quote unquote bear case. It's not a true bear case. It's like the bear case or their bull case is still over $2,000 a share. Stock's $177 a share right now. So they could be way wrong. And even if Tesla even partly delivers on this, you know, the stock could be up a ton. I don't believe that's going to be the case with autonomous driving for a lot of the reasons that you've already stated at all. The one that honestly that I struggle with a lot is the idea that Tesla's going to sell almost 6 million cars in 2029. That'd be more than Ford. It will be in the realm of where Ford and GM were over the past year. And I'm not saying that Tesla can't get bigger than them. It certainly can. I don't believe it.
So to me, the thing that Tesla does that is not cars that I think I actually could buy as being a growth driver in the future is actually the battery technology. You know, from my understanding from a car perspective, and I did a lot of research on electric cars a couple months ago because I bought one, not a Tesla, does seem like in the industry, car industry, and if someone out there can tell me I'm wrong, I'm happy to be wrong, that their battery technology is very good.
Well, yeah, dollar to dollar, model to model, you get more range with a Tesla than you do.
Well, that's true. I know that. I know the range thing.
Yep.
So like, I can see a world where when battery technology gets to a point where it's a more viable you know, we all have battery packs on the side of our house and test, you know, whatever. I could actually see that, not in 5 years, but I could see that being an actual growth driver. Like that's a growth driver I've always kind of believed in, although I think it'll take longer than people think. All the other stuff I think is just a little bit fanciful. But then again, if you told me 20 years ago, or even 15 or however long ago it actually started happening, that Tesla would be able to like launch rockets into space and land them and use them again, I don't know if I would have believed that either. So
right. And that's kind of the point. So despite all the bombastic statements, Musk enterprises have accomplished some pretty incredible things despite missing much bigger goals. So Eric DeVore, you're right. It is Big Hero 6. I believe it's a Big Hero 8. Lou's got an
You did. I
interesting
missed that.
Lou's got an interesting point here, and I think that's a good point. Is there's all these different levels for vehicle autonomy, and points out that Tesla is not subjected to the same regulation in California as Waymo because they don't claim to be level 5. And it definitely, they're saying that they have the best, but they're not claiming to be the same level of autonomy. So
Yeah, and I think Ken Taylor's got a good take here too. It will take longer than anticipated for robotaxis and level 5 autonomous at scale. Time destroys technological moats. Any perceived moat will be competed away. That's a good point. The longer it takes, the higher chance there is that someone else gets to it first. And thank you, Lou. I was not aware that the battery tech, a majority of that patent stuff is owned by Panasonic. So that's good to know.
Yep.
So let me ask you this question then, Jason. Do you think the folks at ARK Invest, Kathy Wood and her analysts, truly believe what they said about Tesla, or do you think this is a marketing tactic?
It's a marketing tactic. Of course it is. That doesn't preclude them from also believing some version of it, right? And when you're a chartered financial analyst and you're releasing these sorts of things, you're putting your charter at risk, I think, by making these statements, right?
Well, and this was a comment earlier by who said it? Oh, Dave from Investing for Beginners podcast. He said that Christopher Bloomstrom had some words along those lines to share about ARK Invest, basically saying this is so fanciful that you're putting your CFA charter at risk, which I thought was interesting. So yeah, I've taken the tact with ARK Invest for a while now that they believe somewhere between 0 and 100% of what they say, but it's closer to 0 in the rest of its marketing. Because look at all the response they got on social media. We're talking about it. They're getting all these like viral responses that are getting retweeted. I mean, for someone, if you've
like
never
P.T.
heard
Barnum said, I don't care what they say about me so long as they spell my name correctly.
Yep.
Yeah,
Yep,
that's it. I want to say one other thing though before we maybe move on to the next thing. We're already 25 minutes in here, Jeff. And that's just look at the results. If you look at ARK's ETFs, I pulled, I think 6 of their more popular ETFs, and generally they've done far worse than the S&P 500 since inception. And a lot of them have lost investors a lot of money. So that to me says more than anything about credibility. When you're making these sorts of picks, they've kind of become the inverse of the dooms predictors out there. The guy that predicts the market crash 35 times, he gets it right once, and CNBC has him on once a month. They were right with some of their very, very bullish calls about Tesla that they first made about 5 years ago. They've largely been wrong about most everything else. And certainly in the aggregate, if you look at the results of their funds, they've been wrong, right? So you have to consider that when you're considering the credibility of what they're releasing to.
Yeah, my sense is they feel like their products are a little bit more appropriate for the 2021 market than maybe the 2024 market, and maybe this is an opportunity for them to try to get some interest back in what they're trying to sell. All right, let's move on to something new.
The entire investment management industry, though, their motto is "We make money even if you don't."
That's true. That's true. All right, let's go out of order on the
dealer's choice, buddy. You're in charge here.
All right, I want to talk about Apple and the AI stuff that they released this week, because I read some things that were written by friends of ours, and I've seen some hot takes out there, and I want to share what my thoughts are, and I want to see if you think this is plausible. So I watched most of the announcement. I went back and watched most of the AI piece of it, and all I could think the whole time was, well, first of all, I still think there is no company better at selling what they make than Apple. I mean, I'm a pretty skeptical person. I'm an Apple fan. I have a lot of Apple products, but I've had Apple products long enough to know that they oversell and underdeliver on a lot of things. So I've learned to take everything they say with a grain of salt. So I watched the presentation with all the AI stuff, and all I could think the whole time was, is this just going to be either disappointing, or is this going to be very limited? All this on-device stuff, is it going to feel like, oh, there's 30 or 50 or 100 things it can do, but only 2 of them are actually helpful to me? And because the big thing that they keep touting is how so much of this AI is on the device. And I've seen takes out there that this is going to, more companies will have on-device stuff, and it's going to diminish the need for AI chips, and Nvidia is going to crash, and all these doomsday scenarios. But I do wonder, though, if all of this on-device stuff is just the thing to get you in the door, and if a lot more of what you're asking the device to do is going to be farmed out to their servers than they're letting on. Because the way they presented it is like, on device, on device, on device. Oh, and by the way, if we need to, we'll go out to this server, but you don't have to because it's going to be on device. And I just feel like it's going to go out to the server probably more often than they're letting on. I'm just really fascinated to see. I will say this. I think it'll be a good test case for if this AI stuff is going to be as helpful as they're making it seem. Because there's a lot of stuff my iPhone can do that I just don't think is helpful, and I don't use it. So I'm curious what you and the listeners in the chat think.
So we'll pivot to some Mets talk after this, Jeff.
Don't worry, Ryan. We're gonna we'll crap on the Mets.
We're on it. Lou Whiteman nailed it, by the way. We'll definitely share Lou's comment there. But I think so. I want to go back a little bit further with Apple when it comes to what they do, because there's a lot of people that said, finally, Apple's showing up with AI. Where have you been, Apple? A lot of people are saying, well, you're partnering with OpenAI, so you're not even really doing much with it. Apple, with the exception of, even from the very beginning, they weren't the first PC, right?
They're never first.
They're never first. They're not the first mover. They tend to be the best mover, though. Like when they bring a product to market, it tends to be very good and almost always better than something else. Maybe, there's a little bit of overpromise and underdeliver. I think we all that have been around long enough remember Steve Jobs's reality distortion generator.
Yeah. And Dave just said in the chat, how many people actually use Siri? I think Siri is one of those overpromise underdelivers. Siri sucks.
Yeah. No, it's true. Siri is absolutely terrible. But it's gotten better. No, it hasn't. I'm lying. But I think my guess is why we haven't necessarily seen things like Siri get better is because they have been working on AI, and they're really good at being secretive. Apple's better for that than they get a lot of credit for. As long as they spent working on something for a car, we never really saw like prototypes, or there was always Apple's working on a car, but that was it, right? That was so.
I think they're further behind than they're letting. So this is my cynic's view. They're rolling out a beta.
Also just called the Jeff view.
My view. They're rolling out. This is starting as a beta. It's not going to be. You have to have the newest iPhone to use it. It's got to be iPhone 15 or higher. So, side note, they're going to try to sell some more devices, and I think it's going to work. I think this is just one big way for them to play catch up. Here's a whole bunch of AI stuff that's quote unquote on device, and it's very like, oh, these two apps will interact. Like it's nothing crazy. And it's going to give them a ton of user data that will probably, I don't understand, I'm not an AI expert, but I'm imagining the more people use it, the more it will get better.
Yeah.
And I think they're going to use the next 2-3 years of like this limited on-device stuff to just catch up. That's my cynic's guess.
I think what Apple doesn't give enough credit for is their chip design. And I think that's an unappreciated
No, those M1 chips
benefit.
are no joke. Or the M chips, yeah.
Yeah. And not just their M chips, but the chips for the iPhones too are incredible. And my guess is that part of their plan here has been making sure that they have the right GPU capabilities built into the silicon in the devices to be really good and to be faster. And you don't see that same thing from anybody else in the smartphone space that's really developing their own silicone in the ways that Apple is, and that could be a help like maintain that customer loyalty if their AI is good, because we know like they prioritize data security and privacy in ways that a lot of other companies that are putting AI out there for consumers have not, right? So I'm generally pretty optimistic about this. The big question, I want to talk about this before we drag your Mets, is how does this affect the AMDs and Nvidias of the world? If we see more AI start to move device centric, do we need all these cloud-based servers out there building AI?
And this is where I don't think that matters, because I don't believe that we're going to see everything shift to being on the device. I think it's a gimmick. I'm curious what you think about this, and I want to know what the listeners think too. I get caught up in how they sell it, but like I do trust Apple with the privacy stuff more than other companies, and then I think I'm an idiot for trusting them. Like I feel like I feel like I'm the rube, like, oh, that they're sitting at home like doing the Mr. Smithers,
Mr. Burns,
Mr. Burns
Mr.
thing,
Burns,
like
yeah.
excellent, like
yeah.
Yes, and Eric has called me tinfoil hat. Yeah, I guess
That's
people are going to
fantastic.
think I'm a conspiracy theorist after this. But yeah,
Yeah.
I guess you're right. If things do move on device, that could be, but
I just don't think I think it could be material, but I don't know how meaningful it is at this point. Right?
yeah, I don't even
think
know that. I don't even know that it would be material.
Yeah. I think the bigger risk for Nvidia is whether or not Microsoft can make money and Google can make money with AI, not Apple.
Yeah, I think the last thing I want to say about the Apple story, and then we will absolutely talk baseball for at least a minute or two, is I'm keeping an eye on two things. How does Apple leverage AI to sell more hardware? And how does Apple leverage the AI to sell more software and subscription?
More services.
And more services, right? Like I have a feeling eventually, I do think this will drive iPhone sales. Like I'll be perfectly honest. I have an iPhone 12. It works fantastic. I have no desire to upgrade my phone. There's nothing about the iPhone 15 I feel like I want or need. I would consider getting an iPhone 16 if I want to play with the AI stuff.
Yeah.
So like, I do think it'll help with that. And then I think that's going to drive, slowly it'll be like, oh, it's on the newest iPad, and oh, it's on the newest MacBook, like they're not stupid. And then I think you're going to see, oh, enhanced AI for the Apple One subscribers, so that's what I'm more looking at. I think the AI is a means to an end for them, and that's to sell more devices, sell more services.
John Geigus is joining the chat here. John, it's good to see you. Treyo, it's good to see you too. I will say as my final words on this is that the real step change that we need to see with AI at the consumer level and also at the enterprise level is fully integrated AI that goes with you and allows you to do lots of different things. Like I would love it if Siri was able to do a better job of reminding me to work out, right? For example, or being proactive about things. And you see a little bit of that. And I mean, even Amazon tries to do it a little bit with Alexa, and it really sucks because basically they're trying to get you to buy something else. It's annoying. But getting to that point where it just becomes so like ubiquitous throughout your life and so enmeshed, but also not being pervasive, but not invasive, if you know what I mean. And I think if there's any consumer-facing company that has a chance to do that, it's Apple.
Yeah, agreed. Hey, everybody, we'll be right back, but first, a word from our sponsors. Earlier in the show, you heard us talk about investing platform public.com. That's where you can trade options with no commissions or per contract fees, and you get a rebate of up to 18 cents per contract traded. NerdWallet recently gave Public 5 out of 5 stars for options trading. If you want to see why, go to public.com and start getting a rebate of up to 18 cents per contract traded. Paid for by Public Investing. Options not suitable for all investors and carries significant risk. Full disclosures and podcast description. U.S. members only. All right. So I know this is an investing show, but let's talk a little baseball because we have some people giving my team a hard time. Um, I want to
Little
say,
like the number of wins that the Mets have.
yeah. All right. So let me say a couple things here. I will never give up on my team. I will always be a Mets fan, but
But they will give up on you.
they were freaking terrible right now, and they crush me every year. But this is wild to me. So my joke with anyone I'm friends with involving baseball is like, how long will my season be this year? Right. So like at the year started and I was like, oh great, my season's over by April 10th. And then they did really well for a little bit. And then I was like, it dragged me into like May. And then I kind of stopped because everything fell apart. But I looked last night or today, I forget, I was seeing if they won last night. So I opened the MLB app and they won 2 in a row and they're still, I don't know, a dozen games out of first. But guess how, without looking, Jason, guess how many games out of the last wild card spot the Mets are right now?
Probably only like 4 or 5.
3.5 games.
Yeah. Yeah.
So 7 games
Yeah.
under 500. They're only 3.5 out of the last wild card spot, which means here's what will happen. I'm going to say this, and if my father is listening, he will absolutely agree with this because this is our consistent theory about the Mets. They're never or very rarely so bad that they don't at some point pull you back in and then crush you. So I have a feeling at some point they're going to get like a game out of the wild card or get into the wild card in like August, and I'm going to be forced to watch games again. And then they will break my heart even more severely than they already have. So that's my take. So yes, everyone is right. The Mets are terrible. And I can admit it. I can admit it.
They are. Steve Cohen, the owner of the Mets, very successful hedge fund manager. We can tie this into investing, and it's the funny thing about it is they're a terrible team, and when he eventually gets tired of it and sells them, he will sell them for more than he paid. Right? It's a guarantee.
Yep.
Guaranteed.
Yeah.
So
all right. That might be enough baseball talk for an investing podcast.
yeah. We went from 11 viewers from 14 viewers to 11. So
As soon as I said Mets, people are like, I'm out. All right, I'm going to change topics here. We're going a different direction. I was thinking about things that I think would be fun to kick around and also get some audience participation. And this question popped into my head. So you hear people talk about moats or competitive advantages with businesses, but mostly you hear the word moat thrown around. And I'm fascinated by it because the more I learn and think and the more experience I get, the more I question and wonder about and I'm not sure what is and isn't a moat. So what do you think are the most commonly like overestimated moats that people attribute to companies when they're like trying to make a bull case and they're blindly excited about a company?
yeah, it's the two things that come to mind. Neither one are actually moats. I think that's the thing. Is number one, people spout these things out as if it offers some sort of a durable competitive advantage, which is what a moat is, an economic moat. And I would say the first one that I probably hear is management,
Yeah.
right? And no, it's not. It's not that. Yes, a very good manager can make a massive, massive difference in the success of a business. We know that. There's no doubt about that. But again, that's not a quantifiable, durable, competitive advantage. And sometimes I'll hear people say the balance sheet, and they have a bunch of cash. That balance sheet, that's a real moat. It's like, no, it's also not. Those things are not moats. What about you, Jeff?
So the one I want to talk about, so the one that I thought of, I think actually is a moat, but I think it's overused, and that's brand. Because I think it absolutely is a moat for certain companies. Like
Absolutely.
we've been talking about Apple, like absolutely Apple's brand is a moat, and it runs deep. It's exactly what I was talking about. The fact that they present their products in such a way that makes you go want to buy them. They have loyal fan base, like absolutely. Coca-Cola, like, people pick Coke over Pepsi and they won't go back,
Marlboro.
Yeah,
These are
exactly. So like
real
but
things.
what I see, especially in consumer facing companies, well, I guess mostly obviously with consumer facing companies, is because a company has a brand that they've heard of, they say, oh, that's a moat. You know what I mean? Like,
Right.
and I think, so I guess that's like a tricky one. Like, how do you, so
It's
I
a
guess my
moat until
question
it's
is like,
not.
Right. Well, that's the thing. How do you know when
Yeah.
when brand is a moat and when brand is a moat mirage?
So I think as a starting point, I think generally it's the only time it's a moat is when it is a consumer discretionary product. That's when it's a moat. For example, Xerox. There was the idea that when the name becomes a verb, a lot of times it's considered okay. That's a real moat, and Xerox's name was not. When the Japanese companies figured out how to do dry lithography, laser printer technology, Xerox's moat was eviscerated by their brand because they undercut the pricing, right? So IBM's brand was not a great moat when there were better technologies out there that you bought IBM, you were now behind the curve, right? So I think that's a big thing. So it has to be like Coke. I think Coke is a good example of like a durable competitive advantage, because when it becomes you become truly loyal to the product for no real reason that you can perfectly identify. Like a lot of people that drink Coke, they remember their grandmom or grandfather buying a Coke for them when they were 7 years old or something, right? And they identify it in some really personal way. Or it's just the soda that they've drunk their entire life, and there's literally no other reason besides that. And they're a Coke drinker, right? They don't. Pepsi's terrible, even though those Coke people are wrong and Pepsi's better.
I
I
haven't
may be
had
demonstrating my bias, even though I grew up in Georgia.
well, all right.
So
So here,
that's what I think is I think that when it comes to brands, for it to be truly durable, it just about has to be some sort of a consumer discretionary sort of thing.
so Lou's in the chat saying competitive advantages are not moats; they are competitive advantages, which I'm glad he said because I
Okay.
agree with him. But I also it's the perfect setup for what I was going to ask
Yeah.
you, which is I think a lot of people used to, and maybe not anymore. Like you talked about like Xerox being like the verb. I think this happened with Zoom.
Yeah. Yeah.
I think Zoom, like the fact that people said, "Oh, let's hop on a Zoom," even if they were using, WebEx or something or Google Chat or whatever. People thought that was like a brand competitive advantage, and I absolutely don't think it was. Um, but I do think that your product becoming a verb for the time that it is could be a competitive advantage, but not a moat, if that makes any
Right.
sense.
Right. And I think that to me, the way I define the difference between a competitive advantage and a moat is a durable competitive advantage.
Yes, that's exactly how I was thinking of it. And Lou's
Lou's
using
describing
ASML as an example.
ASML's, I don't know, 35 billion. It's a lot more than 10 billion, Lou. It's like 35 or 40 billion dollars. Might cost even more than that today in a decade to catch up to extreme EUV for ASML, right? It just would be so difficult to catch up to that. And again, something like Coke, and I keep using that one, but the point is that it is something that allows the company to continue to get a certain level of revenue and margin. And the most important part is selling their product at a very profitable price, generally across economic conditions, right? That's the mode.
So just to switch types of moats for a second, someone earlier in the chat named, where is it? I want to give them credit. Someone said something. Oh, Eric wrote, switching costs.
Yeah.
I assume, Eric, you're saying that that's a moat that often gets overestimated. I think that's a good one.
Yeah.
I feel like with switching costs, if it's true, it actually is a moat, but it's usually not true. I guess that's kind of the way I think about it. Like I'll give you just a very short, like a small example that this is why I think it can be. So I work in a world where technology changes are very difficult to roll out because you have just a wide group of people who have to use technology all the same, like in the school district where I work. And it's a big, heavy lift to get people to switch from one thing to another. You do it, it happens, but it's one of those things you don't want to do more than like once a decade. And I think there's probably dynamics like that in almost any industry, where you say to yourself, okay, this new software could save us 10% cost wise and make us more efficient. But man, I don't feel like sitting down with this group of people and getting them to switch, right? It's just not worth the
Yeah.
headache. So I think when it truly is a switching cost that keeps people with the product, it is a competitive advantage, or a moat. But I also think people throw it around all the time, like, oh, switching costs, switching costs, switching costs, just because it's a popular software right now. And I don't think there's nearly as many switching cost moats as people think. What do you think about that?
Um, yeah, and I think things have also gotten a little fluid. So, for example, banks, right? Switching costs is also often cited as a reason, like Bank of America. Yeah, they have these exceptionally low deposit costs. So they have this cheap cost of capital because they don't pay any yield on their deposit base. But it's a lot easier today to move to another bank because of the internet, right? So I think John's right that John Denley says that switching cost advantages sometimes lead to poor customer service. That's true. You think about a lot of utilities where either it's hard to switch to another one, or even maybe just impossible because there isn't another choice, and you have to use them. No, that's absolutely true. I think I want to invert this though, and let's take a couple minutes. And what is a moat, a true durable competitive advantage that you think maybe you haven't explored enough, or you don't think maybe investors really consider enough when they're looking at businesses?
I don't know. That's a good question. I'd have to think about that. So I'm trying to think, like, what's the book, the Pat Dorsey book, where he has the 4 or 5 things that he lists as moats. It's like brand, is it cost advantages is one of them, like scale?
Yeah. So pricing power, cost advantage, network effect. Lou, you know this, don't you?
Yeah. I don't know. I don't want to like just make
So
something
you
up.
need to lawyer this next time. You only ask questions you already know the answer to, Jeff.
Yeah, I know.
So let me talk, because I'm going to talk, and then you could
Go ahead.
Google it.
You answer the question. I don't have an
No.
answer. I'm saying that. Go.
No, but that's what I'm saying. You could just let me talk about stuff, and you could go on Google in the background. You could pull it up and say, "What's the debt, Pat Dorsey?" And then you say, "Oh, here they are. I know them. They're right here." And you could sound
No,
a
I'm
lot
not
smarter.
doing any extra work for this.
So I'm gonna say I think probably network effects maybe sometimes gets too much credit, but also is underappreciated. Because
Yeah,
if you think,
that's a good. Yeah, I would agree with that.
yeah. So like, just as an example, the like the payment payment networks, Visa, MasterCard. I'll just use them because it's like a 3-legged stool where there's the banks, or the issuers, right? They're the ones that actually lend the money. There's the merchants, which accept the cards, and there's the consumers, which use the cards, right? And each of those 3 legs gets stronger when the other grows. And it's just so powerful, and it deepens their moats, because the more people that have a Visa, the more merchants want to offer it because they want access to those merchants. The more merchants that accept it, the more banks are likely to want to issue those, because they're going to want to have access to the consumers as depositors, or as customers, as borrowers. So I think that's, to me, like maybe the epitome of network effect is the Visa and MasterCard kind of businesses, because there are so many parties that benefit from the network effect that directly makes Visa and MasterCard's business stronger.
All right. So let me ask you another question. What type of moat do you think is the easiest to disrupt and the hardest?
That's a hard question.
Because as you were talking about competitive advantage, network effects, I was thinking about, I had both of those thoughts at the same time. I was like, I think that actually might be the strongest moat, is network effects. But then I thought to myself, but once there's like a crack in that, or once someone puts a board over the moat, I feel like it could be one of the quickest to deteriorate.
It washes out. Yeah.
It's the strongest, it's one of the strongest ones while it's in effect, but as soon as there's like, a leak in the boat, it just sinks.
Right.
And I was thinking of it through the lens of social media. There's an obvious network effect with social media apps, right? You want to be where the other people are, and that draws more people to it, and it just goes on and on and on and on until you stop using that social media app, right?
I want to go where the people are. Little Mermaid, right?
Yeah.
Yeah.
that's very good.
Thank you.
All right, so we have some other. Well, let's maybe wrap up the moat talk and do something else for the last 8 minutes or so. So, Lou says underrated moat Nelnet's fact sheet management unit. There are thousands of
FactSet.
fact set management unit.
FactSet management. Yeah.
Yeah, there are thousands of almost accountants employed by private schools who can't use accounting software but know how to use fact sets.
Coming from someone who has a child at a private school.
Yeah, we won't name it though.
But Lou will.
Eric says biotech has got to be one of the hardest. I would agree with that. John Denley says it works in reverse too.
It
Eric
does.
says,
Once you have that IP, right? IP is an absolute moat if it's good IP.
Yeah.
So,
yeah.
And in pharma, in healthcare, it's usually very good IP. So,
all right. So let's wrap up by talking about Nvidia so that we can find a way to put it in the show title and get clicks. But all kidding aside,
we're going to start calling this the Nvidia live stream.
So I am endlessly fascinated by how much of a microcosm of a lot of things Nvidia has become, but that's not what I want to talk about. I want to talk about how you and I both did the same thing with Nvidia stock about 18 months ago and how it was such a mistake.
I have prefaced it the Nvidia mistake. That's what I've actually called it on our outline.
Yeah, I don't remember when it was. I think it was like right after that first or second quarter when
it was about a year and a half ago. It was early 2023.
Yeah, it was either after the Q2 23 or the Q3 23 report came out, or their fiscal 24, but
it was too early, and it was wrong.
And it was like, we were all like, oh my God, these crazy AI numbers, there's no way this lasts. And both of us trimmed our Nvidia positions. Now, I did it mostly because I wanted to be able to be a big boy and trim a position. I think it was a total of like, I think my total position was like $300 and I trimmed it down to like 280. So, but you trimmed a little bit more. And we were just chatting yesterday because I was talking about like, is it too expensive to buy? Like I actually thought it wasn't like 3 weeks ago. And now I think it is again. Cause it's gone up another, I don't know. I haven't looked, but it feels like another 20% since earnings. So yeah, we both made the same mistake. And you live and you learn.
Yeah, if I had not trimmed, it would be about 8% of my portfolio today. So I'll just put it there, and it's right. So it's pretty sizable. And I here's kind of where I've come down on this, because I've been thinking a lot about this. We've made the videos, we talked about that in the on the newsletter, and we talked about it in the episode that's going to publish next Wednesday. The podcast. That's the thing we do where we talk about stuff, right?
Yeah, it's called a podcast. Yep.
Yes. So the podcast comes out next Wednesday. This coming Wednesday, we talk about it a little bit, but the thing is that since we had Nick and Casey on from Chipstock Investor, I've really been doubling down on my research, into artificial intelligence and what's going on. And it's absolutely astounding how large the spending could be over the next 3 to 5 years as the industry essentially recreates the entire existing data center infrastructure just for artificial intelligence, right? It's that big. It is like $1 trillion big. It is a gigantic number that all completely pivots and revolves around, I don't know, 10 or 20 companies around the world and their ability to make money with generative AI at this point. It's not even looking at AGI, artificial general intelligence. It's just generative AI, which is you going into a portal and telling the AI, asking it a question or telling it to do something like make a picture out of this or give me a recipe for this or whatever. And then it takes that input and then takes all of that information that it's been trained on and it generates something new. That's what generative AI means, right? So just that alone, they're saying it could be $1 trillion that goes just to building the initial infrastructure, not updating it, not maintaining it, just building it, right? So the point is that as much as NVIDIA has been this massive, massive winner, the mistake that I made, Jeff, and I'm going to steal a line from the episode that's going to publish next Wednesday directly from you, and that is learn, not trade. And that was the mistake that I made. I did not spend enough time really. I was skeptical, looked at my portfolio, looked at how much the stock had gone up, and said, okay, I'm going to sell a big portion of my Nvidia because it feels like it's gotten too far ahead of itself.
Right.
And I
But if
did
you had-
simply, I may have reached the same conclusion, Jeff. The decision I made may not be any different, but I didn't do that ready, fire, aim, right? I didn't do the important part and learn.
Yeah, you might have found something to talk yourself out of the sale. So I want to come to something Eric said. So he said, got to be honest, channeling your inner David Gardner and never selling is one of the best decisions you can make. And I agree, except this is what lives in my brain. Okay, I have a couple examples in my head. Like if I spent 1% of my portfolio right now today on Nvidia, do I think that in 10 years it'll be higher? I do. I think there's enough secular momentum behind AI that like I think Nvidia will be okay even at a very expensive price. But and again, I was a much less experienced investor at the time. I thought the same thing about Zoom when it was up 200% in my portfolio. And it dipped all the way down into the red for me, and I sold it several years ago at this point, a couple years ago at this point. And so it's really hard. This is one of the things I struggle with. Like I totally understand the whole never sell, hold on for the long term. And, that's how you get 100 baggers and that kind of stuff.
Mm-hmm.
But it sucks. Now it sucks. Like if Nvidia in my portfolio is up 500 something %. Again, it's like a couple $100, so nothing to write home about. But if that 5 years from now is up 12%, I'm going to be pretty bummed out, and I'm going to be mad at myself for not being like, you idiot. Of course it wasn't going to keep going up. So I think this is the challenge. And, when I go back and look at previous sells, I'm right on some and I'm wrong on some. So anyway, I've done nothing with my Nvidia. I'm keeping an eye on it. The last thing I want to say about it, and then we should probably wrap up, Jason, is I do want to kind of just keep an eye on it over the next couple of weeks, because I have a feeling as we get further away from the most recent earnings news, it'll deflate a little bit. That's just my guess. So I don't know. Maybe if it drops some percentage, I'll take another look and buy a tiny bit. Because I actually do. I'm a skeptic of a lot of trends, but I do think this AI spending thing is going to be around for a little while.
Yeah, I agree. If the next 5 years, I don't know, but the next 10 plus years, I think you're absolutely right. Okay, Jeff, we've done it. It is 5 p.m. We're wrapping up. You're supposed to respond. We banter a little bit.
Yes, we should wrap up, Jason. Here's me responding.
Okay, good job. Nice job with your response. Thanks for everybody chiming in. It's great to see and hear from our virtual friends and our real friends, and to hear from you virtually. As always, we love to blow the 8. We love to give our answers on these hard investing questions, share our opinions and thoughts, borrow our answers. You can try our opinions on, but you got to make them your own. You can do it. I believe in you. All right. We'll see you next time, everybody. Jeff, I'll see you soon.
Thanks, everyone. See you later.